What's up, guys? Marshall Sparkman here. I wanted to do a quick update for my investor friends and kind of talk a little bit about what's going on and things that I'm hearing from other investors and things that I'm looking at and recommendations that I'm making to clients. And this is geared specifically towards real estate investors, whether if you're a seasoned investor or if you're a new guy just looking to get your feet wet. So, a couple overarching trends that I want to talk about that I'm seeing right now first, and then we'll talk about a little bit of advice that I'm giving to everybody. So here's one thing I wanted to cover. So Greater Nashville Association of Realtors, GNR, kind of circumferences Middle Tennessee area, and we're going to talk in general, and I'm just going to use their numbers starting out. But their sales in August of last year, there were 4,288 closings at GNR. Okay, those are recorded sales that went through Realtors, and that's their total number of recorded closings. Well, August of this year was down to about 3,566. So they're down 16%, which means we lost out on about 722 closings. In the grand scheme of things, is it down? Yeah, it's down. Is it the end of the world? No, it's probably not. There are about three main driving factors, as you guys well know. The driving factors are the interest rates went up, so they would have locked it if they closed in August. They would have locked their loans in July. So July of last year, the average interest rate was 3.05%. Average as of end of July this year was 5.75%. So we had a 2.75% hike in interest rates. Now, you guys know as an investor, the investor rates shot up even more because Fannie and Freddie put additional pricing, risk-based pricing on investment properties. More about that later. But the biggest things are that drove our real estate market is not only interest rates, but we had record high sales prices. Nobody wants to buy a house when you're at the peak of the real estate, unless if you absolutely have to. We have had a lot of reloads here. People do have to move, and there are still sales going on right now. But the people that didn't have to make a move, they're kind of hanging tight and see what's going on. The third thing is the media-driven perception of potential future instability in the market. So the media is going to hype up. They're going to do what they do, and they're going to sell fear, and they're going to say how bad the real estate market's going to be. And I think that's had a lot of people, a lot of buyers that I've talked to. Everybody's like, "Whoa, let's just hang tight and see what happens." So that's the reason for it being down 16%. Okay. Now I think our house prices are gonna level off. The values are gonna level off. You may get an occasional dip here and there, but for the most part, now is the time to buy. I think everybody 5 years from now is going to look back and they're going to be like, man, I wish I would have bought in 2022. Just like right now, you're looking back saying, man, I wish I would have bought in 2017. I think Nashville is going to continue to go up in sales prices. We've been up like 40% year over year for the past couple years in a row. It's ridiculous how much Middle Tennessee has gone up. I don't think we're going to see that 30 to 40% increase anymore. I think we're going to go back to a healthy 10 to 20%. National average healthy market is only 5%. Middle Tennessee, historically, we have been 10 to 20%. We still have plenty of jobs. We still have plenty of people relocating here. Okay, enough about that. So let's talk about funding and financing your deals. I've got a new loan product that is called Investor Cash Flow Loan is what we call it. You may hear of it as DSCR. That's Debt Service Coverage Ratio. I've got investors coming to me refinancing their whole entire portfolio onto a 30-year fixed loan. This loan is amazing. It's mainly for investors that own multiple properties, and you may be a self-employed person that's writing off all your income on your taxes, as any good self-employed person would do, right? Any good entrepreneur. Well, I don't even have to look at your income for this loan. It's based on the income earning potential or current income earnings on the investment property itself. I'm not even looking at your personal tax returns. Don't want them, don't need them. Super easy loan to close. The only downside of this loan, it's an amazing product for investors. The only downside is it's about a full % higher in interest rates than the going market conventional rate loan. But for those of you who can't get any more conventional loans because you're already maxed out, or you just simply don't want to go through the ringer of having to get a Fannie or Freddie loan, because it's like pull your hair out nightmare trying to get, trying to do loans for investors nowadays. It's so ridiculous. But this loan is super sweet. It's super easy, and be glad to help you guys with that. So if the going market conventional rate is like 7% right now for an investment property, this is probably going to be 8%. So just expect a little bit higher of interest rate. You may have to pay a point, kind of depending, but as long as you're okay with that, it's cheaper. It's cheaper than hard money. And if you're still cash flowing on a fixed rate, it's much better to get your portfolio on that. Also, ask me about HELOCs. I've been doing a lot of HELOCs, Prime Plus 2% or whatever the going market rate is for HELOCs. It's based on Prime and it shifts on a regular basis. But I can also help you out with HELOCs, mainly on your primary residence, some second homes, investment properties, a little bit more complicated to get a HELOC on. But that's the way that I'm seeing most new investors start, or people that are flipping homes. I see them using their HELOCs, and I can help you with that as well. So hopefully you find this fruitful and helpful, and I'm here to serve you and your clients. Anybody that you know that needs to finance a house, I've got your back. All right, thanks.